Last week's jobs report was very underwhelming, only adding 22,000 jobs in the month of August, and the market reacted with the lowest rates we've seen all year. I'm going to explain what it means next. So if you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team about how to take advantage of these low rates or what this may mean for your plans long term, you can schedule a call with us with the link in the comments. The August jobs report. The expectations were to add 75,000 jobs and only 22,000 were added, well below expectation. And the mortgage rates reacted, coming down to 6.29% on Friday, according to Mortgage News Daily, the lowest number that we've seen all year and the lowest rates we've seen since October of last year. So there's some positives here when it comes to affordability, when it comes to having a lower monthly payment if you're looking to buy a home. And there's also a lot of people that have pulled out of the market and don't even realize that this happened. On top of that, we have a Fed meeting happening next week. And the expectations beforehand, based on Jerome Powell's comments, is that we would probably see a 25 basis point cut. And there's a website out there, it's called the Fed Watch tool from the CME Group. They have odds of, will there be no change? Will there be a 25 basis point cut? That was before this jobs report came out on Friday. Well, if you look at their website now, the odds of no cut, they're off the table. They're not even showing percentage, and we're seeing an 88.2% chance that there is a 25 basis point cut and an 11.8% chance we see a 50 basis point cut. Then when you look at the December predictions, we are seeing that there's a 68% chance we're going to end up between 350 and 375, which would be 75 basis points less than where we are right now. So those numbers have moved dramatically. Even earlier in the week, there was only a 40% chance we're 75 basis points lower by December. So you can see the market is reacting to this. And lastly, President Trump, he's talking about declaring a national housing emergency. And while this may seem silly, at least we're getting attention from Washington right now. We're getting attention from lawmakers where this wasn't even on the radar for the Fed. Fed very rarely mentions housing. So what does all this mean? There's a lot of things happening right now, and it seems like the things we've been talking about, the lack of transactions, the lack of inventory coming to the market, even though we are up 15, 16% compared to last year through the month of July in the greater Philadelphia area, there is a tension on the housing market right now. And here's what I am clear on. At the beginning of the year, a lot of people predicted we'd see mortgage rates in the 6.34% range. I thought we were going to be well over that. I was wrong. That's number one. There is a moment in time right now, if you've been on the sidelines or you're maybe unsure about where payments are going to be coming in, the current inventory just got cheaper for you in terms of your monthly payment. And that's all the more reason to sit down with somebody and see where your payment actually is going to come in, because there's variables like taxes and insurance and everything else. So this is certainly a big change when it comes to housing affordability. And we don't know how long this could last. It looks very clear that we're going to see some movement from the Federal Reserve based on these odds that are out there as of the beginning of this week. September 8th is when we're filming this. So it's clear to me we are going to see some action from the policymakers. Now, the question is, what's the reaction going to be in the market? And if I'm a buyer right now and I'm seeing homes that I like, I would go look at them, because if rates continue to come down below 6%, you're going to see the market flooded with other people who were waiting for rates to come down as well. And if I'm a seller right now, I'm seeing this as, hey, there might be a window of time here between now and the holidays where I can get my home sold with this new influx of buyers entering the market because homes just became more affordable. And we don't know what the reaction is going to be. Will there be one rate cut, two rate cuts, three rate cuts? We can't control any of that. All we can control right now is that rates came down, inventory's up, and there's opportunity to go get a home if that's what you're looking to do in the marketplace. Remember, you can renegotiate the rate if it comes down. You can't renegotiate the purchase price. And in Pennsylvania and the greater Philadelphia area, we are still seeing inventory less than 3 months. 2.33 is the number for the greater Philadelphia area. That means if nothing new came to the market, everything would be sold in 2 months and 10 days. So be mindful of that until we see a lot more inventory come to the market, even though it's improved and competition has waned a little bit, these lower rates are going to bring people back. So do you want to be an early mover or do you want to wait for the whole crowd to get involved? And I know the folks that are the most excited about their real estate decisions, they move one way when people are doing the other, because that's when you can maybe get a little better result when it comes to your need, your household, and whatever you're trying to find.